Howdy, welcome or welcome back to my YouTube channel. If you are new here, then welcome. My name is Rachel and I am a disruptor in the accounting industry. I'm disrupting what it means to be an accountant, what it feels like to have an accountant, and showing you the behind the scenes of running an accountancy practice. I create long and short form content across YouTube, TikTok, and Instagram, and so I'd absolutely love to see you there, where I share daily behind the scenes content of what it's like to scale a business. You can use the links in the description of this video to find me everywhere that you consume content. My content is literally the content that I desperately needed at different points in my journey so far, and so my content is very much by me and for you. So if you've got any questions or content requests, you can pop them in the comment section, and that drives the content that I bring to you next. In today's video, I'm talking all about how trading as a sole trader compares to trading as a limited company. I'm going to run you through the main features of each kind of structure, why you might choose to trade as a sole trader or a limited company, how you can pay yourself through each structure and the associated tax considerations, and finally, when might be a good time to consider changing up the structure of your business. So grab a cuppa and maybe a snack because we've got lots to get through. First up, deciding whether to operate as a sole trader or a limited company is one of the first and probably the most important decision that you're going to make as a small business owner. So it's a really good idea to understand the pros and the cons of each structure and the obligations that you're going to have under each. So let's kick off with looking at the sole trader structure. When you're a sole trader, you and your small business are legally one and the same. From a financial point of view, all of the profit of the business therefore belongs to you as the owner. In a sole trader business, there will only be one owner, whereas on the other hand, a limited company is a separate legal entity from its directors, and therefore the finances of the business are also separate. Because of this separation, a limited company director does not have to take all of the profits out of the business or pay tax on them earned in 1 year. There may just be one owner, but having multiple shareholders in a limited company is also common. So why might you choose to trade as a sole trader or via a limited company? So when we're considering this question, there are a few other reasons alongside the legal and financial separation that might make you opt to structure your business as a limited company or as a sole trader. The difference in legal structure has implications for how you personally would be liable for anything going wrong in your business. Being a sole trader means that you also take on all of the liabilities of your business. That's to say that if something were to go wrong in the business, say an insurance claim were to be made against the business or a large debt was incurred, you as the owner of the business would be personally liable. On the other hand, in a limited company, the owners are not responsible for any liabilities of the business and their personal assets are not tied to the company. That means that shareholders cannot be pursued personally for any debts the company incurs. This reduces the personal risk and can then be a major deciding factor when someone decides to set up as a sole trader or as a limited company. Next up, let's talk about admin. So as a sole trader, you're going to have less reporting duties and admin requirements compared to being a limited company, as they only have to register for self-assessment with HMRC and then prepare a set of accounts and file a self-assessment tax return for each tax year. On the other hand, a limited company has to file a set of accounts with Companies House, a tax return with HMRC, and file a confirmation statement again with Companies House. Directors who withdraw money from the company will also have to file a self-assessment tax return, and if anyone in the company is paid a salary, then the company will also have to be registered for PAYE purposes with HMRC and have a payroll software in place. Your legal responsibilities as a company director also include safeguarding the company's assets and making the decision to cease trading if you know the company won't survive 12 months. If you fail in your responsibilities as a director, the consequences can be serious and you could even end up going to prison. That being said, working with an accountant will make sure that you are up to date and accurate with all of your filings. The final key difference you might consider when choosing your company structure is status. Certain suppliers or businesses may prefer to work with a limited company rather than a sole trader. So it's worth doing your research on this and whether businesses in your industry have a preference. Similarly, if you think that one day you might seek external investment or even exit your business, then trading as a limited company will offer you more options. Next up, let's consider how paying yourself and tax obligations differ between sole traders and limited companies. As a sole trader, you don't have a formal process in place for how you pay yourself personally, since the finances of the business are not legally separated from you. However, we recommend all of our clients have a process in place for taking funds out of the business that they need personally so that they can then reinvest leftover profit into the business and plan and save for personal tax. A sole trader pays income tax on all of their business profits, regardless of how much money they actually pay themselves directly. This means that if the business is particularly profitable in a tax year, the owner will have a higher income tax bill. In terms of how a limited company can pay themselves, they actually have a bit more choice when it comes to ensuring personal tax efficiency. So most directors will choose to pay themselves a regular monthly salary via payroll, like you would in employment. The annual value of this salary will usually fall within their personal tax-free allowance, which ultimately means that there is no income tax for the director to pay on that salary. This salary can also be deducted as a tax-deductible expense of the limited company, and if you've got an accountant at the start of each tax year, we or they will usually play a little bit of limbo to make sure that your annual salary is as tax efficient as possible. This salary can also be topped up with dividends, which can be withdrawn from the profit after tax that the limited company has. Dividends are then also taxed at a slightly lower rate than income tax rates. A limited company director does not pay income tax on the total profits of the business. However, corporation tax will be due on the company's profits at a minimum rate of 19% and a maximum rate of 25%. So when might be a good idea to consider changing up the structure of your business? The personal tax efficiencies that come with trading as a limited company rather than a sole trader tend to increase as annual profit increases. However, when you'll benefit from trading as a limited company from a tax point of view will also depend on how much money you want to take personally from your business and how often. So if your business is growing increasingly more profitable and you're thinking of incorporating, it's important to discuss any potential tax savings carefully with your accountant and to ask them to calculate what you could save before you consider changing your company structure or setting up a limited company from day one. If you do decide that setting up a limited company or converting your sole trader business is your next move, then check out my other videos here, which explains the company incorporation process a bit further. And that's a wrap. Please do let me know in the comments section what you found the most helpful or if you have any follow-up questions. Thank you so much for spending some time with me today, and I hope to see you again very soon.